trading day of the month for August 2023. We are down on the day a small amount. The sell-off at the end of the day affected our trade. We were up and then we were down, and so down on the week, down on the month for the first trading day, up on the week. This includes yesterday's trade, which was up, and since this is the first trading day of the month, it's one of those weeks where Monday is the last trading day of July, and then Tuesday is the first trading day of August, and so the month and the weeks are kind of overlap each other, and so we are up on the week but down on the month because the first trading day of the month is the same day as our trading results today, and down or up on the quarter, $1,325 off of our quarterly equity peaks that we made yesterday, and up on the year. And yesterday the strategies were in a equity peak, so I went back and looked at the portfolio calculator. They're at an equity peak yesterday, and so we our last live equity peak was on May the 5th on an end of day basis. So on an end of quarter basis, we had an end of quarter equity peak yesterday. End of day basis was May the 5th, and we transitioned strategies, and so we are 10K off our best levels. So about 4% off of our very best end of day back in May. And so let's look at the portfolio calculator. This is updated through yesterday. We were up about 18K on the month. July's results shows plus 5K. We started on July the 10th, and so that is the reason why we did better. We waited for a drawdown on July the 10th. Because we were starting a new portfolio. The temptation is to do the same thing this month, and today it would have been better to sit out today. Obviously, we've had some low some months with some low profits, 5K, 8K here. May was 8K on this current model, and then June was up, and so typically things are cyclical, and when things have not, things have been kind of low, and then they get more profitable, less profitable, more profitable, less profitable. And so while we're up on the 18K on the month for July, the models are still only up 5K, and so it's possible that we could go through a beginning of the month drawdown before we have a run. But we've seen such a low profits in July, such low volatility, that we are either at a point where ranges will expand and we'll get get some of these larger months. We want to trade for some of these larger months that we saw back in June and January through April. But it's possible we could continue a summer chop. We could continue to see lower VIX. I'm going to show you some strategies that may add if we do see that. And I want to go over the market trades on the day and portfolio results. Since this is the first trading day of the month, we'll be talking about July's results as well, and August, and what we're looking at, and some of the strategies that I am looking at trading in August. We spent a lot of time looking at the Nasdaq. I think the moves in the Nasdaq are sharper and more definitive than the other indexes, so we spent a lot of time looking at that. Yesterday's trade and today's trade look similar, and it's just very choppy, just narrow range, up, down, just all day. And at the end of the day, you saw it pull underwater and then bounce, and this was favorable. Today, they pulled it all the way under the water, and this bounced at 3:50 Eastern. This didn't bounce until 4:14 Eastern, so the last minute it bounced. So it was pulling underwater and then bounced, and so I thought the market would break out today because the market's it sold off, rallied back, sold off, rallied back, and it's just been sitting up here at these levels, ready to hit 52-week highs, and it's just hemming and hawing up here. A lot of overbought conditions in the market make it difficult for the liquidity to step in, I guess, and punch it through. We shall see. A lot of 0DT options trades are definitely getting hurt by these very narrow 100-point Nasdaq ranges, very, very narrow. And so let's look at the 24-hour chart. So here is the 60-minute of the 24-hour chart, not just the day session. You could see what we're talking about here, where the market kept testing this 15,500 level, and then it rallied all the way up here. Then it came all the way back, tested this level again, rallied all the way back up here, and it's kind of been in a holding pattern, kind of pulling back, and just seeing what happens here. If it's going to come in here and take out this trend line. Oftentimes when the longer trend is up and you get a short-term trend line down, it'll come through here and punch through. So we'll see how long it pulls back, or if it does roll over. It's possible it could roll over. It's hard to call this market right now, and this low volatility market that we're seeing could break out either way. You can see how narrow the ticks are, plus 732, minus 1034. Not much upside on the ticks. And advanced decline line, it was up here yesterday, up above 1,000. Today it was mainly below 1,000, but just really range bound, very, very sideways, very, very range bound the last 2 days around its middle point. And so let's look at the trades on the day. S&P strategies, tick pulse, you could see it short here, just no follow through the downside, typical short trade in this market, minus 150. Cobra CT3 long trade, plus 87.50, no follow through, gap fill, hit its profit target, nice trade. Mirror didn't move up enough to hit its profit target, has a profit target up here, slightly above where the highs of the day, and exit at the end of the day, minus 50. And then opening chop did well, short long, plus 325, and then gap continue in reverse, plus 137.50. Just not a lot of movement, so not a lot of opportunity to be that profitable. And the Nasdaq, we had this move higher, EVP1. I thought we'd finally break out here. These EVP1s jumping in. We were net long 5 contracts up here, and so we would have done well had this market continued higher, but it just rolled over on us. It pulled back, won't follow through. Tick pulse got short here, rallied and stopped out on a tight stop. This EVP1 was stopped out. This EVP1 takes short trades. It's a little bit of a short trade here at the end of the day before that pop back rally. And then tick count trend had a little bit of a short trade here, plus 575. Tick reversal, no follow through, minus 70. Tick long aggressive, minus 695. Momentum reversal, minus 115. Just nothing happening really in this market right now. Like I said, it looks like it's just trying to hold this pattern. It's tested these levels down here. It's surged up here. It's just waiting to break through to 52-week highs is what it looks like. But we'll see. We'll see what happens tomorrow. We're flat at the end of the day. We're ready to take long or short trades regardless of what happens. So it's possible it could just continue to stay in this range between 15.9 and 15.5 and chop around in here the rest of the summer. So we are prepared for that. I want to take a look at some of these strategies. These are the HVDP strategies. I've placed them in the members area for the portfolio money management algorithms today, and I use them as an example. The open code is there. The 5 red candle strategy is there. And so potential strategies to trade. They don't have very long-term patterns. This one looks at the SINX pattern, and you can see it stopped out there, captured that move there, and so it has some decent opportunity. Opening chop, this is the one I'm looking at. This trades the S&P. Potentially trade the Nasdaq. You can see how well it did today. And then news chop did well yesterday, didn't trade today. And then a martingale strategy. This trades multiple contracts, up to 21 contracts. So it requires a larger account to leg into this, and so it uses price and time to leg in. And so it was profitable today, plus 7,000, but it is a multi-contract strategy trading the Nasdaq up to 21 contracts. And so you can see it took some trades here. It added to the position down here, and exited right there. And then took another trade right here and held it to right here. And so those are some potential strategies to trade. Here's another SR strategy, support resistance strategy that I'm looking at. And so looking at more counter trend strategies for this market, potentially a lot to test. You not only have to develop the strategy, you have to make sure it's a stable strategy and it it works well with the other strategies in the portfolio. And I'm going to show you the portfolio results next. I want to share a little bit about my technology setup because I get asked about this. But I have a 6 monitor setup right here, and I have 6 monitors, and I have my VPS dedicated server is, I have it in this monitor. I have another Windows 11 computer that is on RDP. So you can use RDP to log into your dedicated server. You can also use RDP to log into your local computer. So I have a Windows 11 computer right here that has TradeStation and multi-charts on it that I look at. And then on this, I have a Windows 7 computer with TradeStation 9.1. And right here, my main monitor right here is I have a TradeStation 10. This is TradeStation 10 up here as well. TradeStation 10. My dedicated server also has TradeStation 10. So I'm running TradeStation 10 on my local desktop. This is my local desktop. This is an RDP to a Windows 7 computer. This is an RDP to a Windows 11 computer. This is a RDP to my dedicated server. This is my local TradeStation 10 that I run, and I have 4 TradeStation logins to do this. Obviously, I have a couple of spare windows over here to move things over that I can look at as well. So that's my technology setup, and so I want to show you I'm showing you this window right here next, and then I'm going to show you this window with the multi-charts portfolio trader. So this is my Windows 7 TradeStation 9.1 setup, where I have the money management algorithms. I have the Stock Index portfolio all 1-minute charts on this computer. I haven't updated my dedicated server. The results are the same the way I've set it up, so it doesn't change the actual trading results, but it allows us to use our money management indicator updated on a 1-minute time frame. And so you can see the total net positions today in this. If you had, well, it's +5 right here was our biggest. Didn't really care for that trade. I thought we might follow through though, but it could go either way, and I hate being in this having 5 positions here when we're just a sitting duck and volatility's low, and feels like they're just gonna slop it around. And but it was due to break out. We've had 3 days consolidating right here, so didn't want to override it either. We're also due for a bigger move, a bigger month, and doesn't mean we'll get it, but one of the things I say that you could test is, should you change your position size based on the range and the time of day? Potentially. I'm going to go over that. Our strategy, our signal strength strategy, our market position strategy after this. +2 on the S&P, and this is the P&L. We're up most of the day, so just dip down, rally, dip down, rally, dip down, rally, dip down, rally. At the end of the day, boom. And so because we hold positions at the end of the day and it did this, we were net long. So it was down on the day. Had we exited a little earlier, would have been profitable on the day. And so let's look at signal strength trader. It took 1 trade today and it was down. So the signal strength trader would have lost today as well. It just trades 1 contract based on, and this is just the Nasdaq. We're just looking at the signal strength trader for the Nasdaq. It would have made an equity peak yesterday, and it is only up 16K on the month, trading 1 contract. That's pretty efficient. Minus 455 today, trading 1 contract. And here's the market position trader. It is up 96K on the year, and let's see, the daily results are 330 because it exited early, and it only had, the most it can trade is 5 contracts, so it would have maxed out at 5. And then since all the exits are normalized, typically in our portfolio we have a diversity of exits, but this is normalized, so these are all exiting at the same time. And so yeah, it was up just a little bit. Plus or minus 1,000 is in this portfolio setup kind of a break-even day based on the way this trades and the number of positions it can hold. So let's look at I want to look next at the multi-charts. This is the multi-charts portfolio trader. This is what this looks like. And you can see this is back to 2014. Just like our portfolio calculator, the results aren't exactly the same. Some of the results in multi-charts are a little bit different, and the Mag 7 strategy tests poorly. Even though the data and the code is the same, the Mag 7 NQ strategy has a negative equity curve in multi-charts. So keep in mind, this is the closed trade drawdown too. It's not the end of day drawdown, which is we've discussed before. It's different. And here is the performance summary, and you can see the individual breakdown by symbols overview. This is the Mag 7, and you can see it was actually up this month. If you look at the Mag 7, it was down, and it has a bad test in multi-charts, but it was actually up on the month, and so the monthly results are different in showing profitability, more profitability in multi-charts. Let's look at the monthly period analysis. It was up 2750, and overall monthly period analysis for the portfolio, it was up 10,760 instead of about 5K, because our Mag 7 was down, I think, 2,000, so almost a $5,000 swing just based on the Mag 7 results being different. And so that's the one strategy that's different, and the rest of the strategies are close to similar. But this is the multi-charts portfolio trader, and I like looking at the performance summary with the drawdown curve and the cyclical nature to see where we are as well. And so these are all the tools I use. I gave you an update on my technology setup, but in portfolio analysis, I use the portfolio calculator. I use the multi-charts portfolio trader, and I use the money management portfolio. I'm starting to use the portfolio money management algorithms as well. And so these are the three tools I use. The portfolio trader and multi-charts that have some tricks that I want to share with you in the future on some global variables to override all the stop losses. We can say, hey, what if we put in a $700 stop loss and a $700 profit target on everything? What if we exited everything at the same time? I've added some code to some of the multi-chart strategies to have a global variable effect. Instead of each having its different stop losses and profit targets, you can normalize all the exits and normalize other things like don't trade on FOMC, don't trade on FOMC minutes, and then quickly run the test in the portfolio trader. You can have those global variables in TradeStation. It's just there's not a quick way to run a test like the portfolio trader in multi-chart. So once again, portfolio calculator, end of day equity curve analysis, portfolio trader multi-charts would give you closed trade analysis, and the portfolio money management algorithms allow us to test down to 1 minute intervals for drawdowns and to fine-tune some algorithms for the portfolio at the portfolio level. And so extended daily report today for the trades for August, as well as the results in July and some of the technical tools we use, some of the portfolio tools we use, and the results, the monthly results. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.